Good afternoon, everybody, and welcome to HYCM's Level Up workshop with myself, Giles Cochran, the Chief Currency Analyst here at HYCM. Good to have you coming in. Just going to say hello to folks. Hi, Aaron. Nice to see you again. Diep, Amelia, good to have you back. Sammy, Toby, Van, Ismail, great to have you guys with us for the next coming hour. I really hope this is going to be informative and helpful for all of you guys who are coming. Just as people are coming in to the webinar, yeah, thanks, Sammy. I guess you can hear me okay and see my screen. So any problems, just flag up. And don't forget, as we're going through the webinar, please do ask questions as you're going along. Like if you want, if you've got any trade ideas, any, if you like my comment on any sort of trade setups you're looking at, please do put that in the question panel. And I'm really happy to give my perspective on, different currency pairs and what I think about different outlooks of different currencies. So please do use that facility and ask questions as we go along. Just once again, do the disclaimer. For those of you who attend regularly, you understand the nature of this workshop. For those of you who are just coming for the first time, the idea of this workshop is not to provide trading signals. So this isn't like I'm telling people where to buy and sell, put your stop loss here, put your take profit there. Although we do look at entries, we look at exits, we look at take profits, it's all from the perspective of education. So all of this is about how to, educate ourselves in trading so that we can make informed decisions for ourselves. So that's just the idea of this workshop, is to get you guys practicing the skills that a full-time and a professional trader like myself would do. So hopefully by seeing how the perspective of a full-time trader is, you can help you guys, really embrace and understand that for yourselves. Okay, the session ahead, I've just remembered I haven't put in the handout, so I will just quickly put the workshop guide in there now. I'll just get rid of the last handout guide and put this current one in here. There, that's in there, nice. Okay, in the coming session, we've got a special topic ahead, and this is how to trade out surprise data releases. We're going to look at a 1-minute chart entry on the New Zealand business confidence example from last week. Okay, it's a good example, and we're going to see all about the context, what we're looking for when we get a data release that's in line with the prevailing sentiment. We're going to see how you go about actually doing that. And a worked example is really helpful, so we'll look at that. And if you look in your workshop guide, if you open it up, which is in your handout section, which you should look at that in your GoToWebinar control panel, little grey arrow pointing to handouts, 1 of 5, and you'll see this is the special topic that we're looking at. So we'll get to that towards the end of the webinar. And again, don't forget, if you want to ask questions as we're going along, please do. And I'll either ask the question as it's going along, or I'm thinking today, like if you've got a trade example, maybe we could do trade examples at the end. So even if something occurs to you during the webinar, put it down and we'll start to look at it. The idea is that I want this to be useful for you guys, helpful for you guys. I want this to be something that helps you in your trading. This worksheet in itself, I designed this to try to be small enough so that it's not overwhelming, but sharp enough that it's useful to have. So I've just put these 5 headings: looking back, looking forward, looking at the charts, looking at the risk, looking at the outcome of your trade. And if you just do that each week, that would be really, really helpful for you, just to keep following this pattern. Okay, looking back, identifying sentiment, identifying key market sentiments, summarizing it, looking for any upcoming market events, then pairing up weak and strong currencies, writing them down, looking for key technical levels to enter, placing your orders, and don't forget that includes your stops and your take profits, as well as looking at your risk. It's these practices that when you do over and over again, after a while they just become second nature. And then you just, you just see the market through this lens. And once you're seeing the market through this kind of fundamental lens, you're going to find it very, very hard to go wrong, because you'll just be continually on the right path and understanding the reasons why currencies are moving in certain directions. Right. Okay. So We've done that. We've got the handout for session. Don't forget email suggestions for topics to me here, giles.cochran@hycm.com. Always happy to take your questions. And again, I put this in because the whole point of what we're trying to do, when the heart of fundamental analysis and trading using fundamental analysis is really, you want to do these two things. You want to pair up a strong and a weak currency against each other. You're looking for currencies that are doing the opposite direction, and you want them traveling in the opposite direction for a specific reason, okay? Because once there's a specific reason for a currency to move in a specific direction, and as long as that reason maintains the same, that sentiment, that mood is going to play out in the market. One of the frustrations I think I had when I first started trading from a retail perspective back in 2009 was I learned how to trade the markets from a purely technical perspective, and many of you here might have had that same experience. I've just learned the technical support levels, resistance levels, moving averages. I've learned price action, pin bars, false breaks of inside bars, all sorts of tech analysis, and then I purely look at the currencies from a technical perspective. And one of the things that I get great pleasure from now is when I see a really, really good technical setup that technically looks sound, but I know from a fundamental perspective it's awful. That gives me so much pleasure, weirdly, because I think, well, there was once upon a time I would have looked at that trade and I would have seen maybe a big pin bar, a false break, a key level from weekly resistance or something like that, and think, wow, that's a fantastic signal. It's a close in the right direction. It's long. Everything is good, but I think actually fundamentally the currencies are moving in an opposite direction, and we saw that at gold. For those of you, I think Sammy, we were there. I think Sammy, you were there when we looked at the a false breakout on gold on the 1,350 ounce level, and technically it was quite a good false break, but I could tell that the market was just waiting for the Federal Reserve to make its decision, and that was going to decide the direction of gold. It wasn't going to be anything to do with the price action. Not saying that technical analysis isn't important. Yes, it is important, and I do use it. All I'm saying is that if you solely relied on technical analysis, you'll find yourself going wrong. And what we're looking at here, is the heart of fundamental analysis, pairing the strong currencies against the weak currencies, and keep doing it, okay? So without further ado, let's move in. Turn to your handout, please. And we turned out to your handout. We're going to be starting off at the beginning. We're going to begin at the beginning, as it were. And this is all about looking back, okay? So whenever I come to my desk, before I even look at my charts, the first thing I want to do is I want to look at the news feeds. I want to see what significant news has taken place while I've been away from my desk, and I've got to key into that key mood. So we're going to go through a little bit of that together. And one of the first things I want to look at is I want to look at Asian equity markets. Okay, and so this was the picture of the Asian equity markets this morning. They were lower following the US, which was on holiday yesterday. So yesterday's North American session was a holiday session out of the US. And the first thing that's really to note is that US and China have reportedly been struggling to agree on a schedule for this month's planned trade talks. That was the news that greeted me at my desk this morning, amongst other news, of course, but I put this here because it's relevant with the equity markets. And you can see that the equity markets were trading slightly weaker. We had the Nikkei down 0.29%, remember? Oh yeah, Sammy, I just see your question. You remember that? Yeah, Sammy. You see, Sammy, that kind of insight, that lesson is really helpful, because it's one thing to learn, the fundamentals in abstract, but when you see it playing out, then it really helps your learning. It really accelerates your growth. So, I was so pleased that the timing of the trip in Dubai works so well from that fundamental perspective. So, remember, when the currency markets are down like 0.1%, is significant. So when you've got a movement of plus 1%, you want to really take notice. So we can see that coming to the desk this morning, there was like a gentle, risk, a gentle risk-off tone, I'd say. You've got the Nikkei, which is a flat, nothing too much. The Nikkei futures down 0.29%, the Hang Seng down 0.39%, Shanghai Composite just up 0.21%, S&P 200 0.9% down. So, slightly risk off, but nothing too much. But there's, that the point with the risk sentiment at the moment is it's very fragile. The market is very sensitive to particularly US-China trade wars, but there's other risks in the market. There's Brexit risks. There's political risks out of Italy. So there's a whole, a range of risk that is really, put a good strong bid under the yen and under the Swiss franc. Remember the US-China trade war evaluation? Said it before, say it again. What happens between China and US is very important. And now here's a little tip. If the China and US manage to get some kind of truce, if they manage to basically say, we're going to bury the hatchet and we're going to keep on working, with all the other countries in the world as we have been previously, we're going to have, consistent and reliable, world trade kind of relationship. Then, business is going to carry on as usual. But if the US and China, if this trade war gets worse, and if US and China, remember, this is kind of an East meets West battle. There's a geopolitical battle that's taking place here. You've got the, basically the sea power of the West, US, UK, and then you've got the land power of the East, Russia, China. So, in sort of geopolitical thinking, this is, the sea power of the West versus the land power of the East. So if that geopolitical concern topples over into this trade war, and say the US starts saying, okay, well, Germany, you are our ally, so we don't want you to be trading with China at the moment, and okay, UK, we don't want you doing much deals with China because you're our ally, and China starts saying, okay, Russia, you're our ally, so we don't want you doing many deals with the US, Germany, or UK. If that starts happening,
tweets here from US President Trump says we are doing very well in our negotiations with China, and while he is sure that they would love to be dealing with a new administration, so they.
That's the news squawk that I use daily because it keeps you informed with breaking market news. I'll talk a little bit about that later. So if we get that that split, then we're going to see probably quite a large drop in GDP of the world GDP. I would anticipate seeing 5% plus, maybe moving up towards 10%. So just watch that doesn't spill over and get more serious. But that's what the concern is. That's why bonds have been prices have been rallying hard. That's why there's concerns about equity markets going to get dragged down, though they've been remarkably buoyant. So yeah, that's the story. That's the thing. But that's why the market's concerned about it. That's why this risk sentiment is fragile. Okay. Now, question for you guys. Tell me, why do FX traders care about the equity markets? Why, oh, why do we care about the equity markets? Some of you guys have been following me and following this webinar for a while. Can you answer this question? Why do we want to look at the equity markets? Okay, what are we trying to learn from this? Because this is going to be helpful for us in our currency trading. Remember, we're looking for a strong and a weak currency. Okay, when we come to our desk, we want to pair a strong currency with a weak currency. So the clue is by looking at the equity markets. That's right, Sammy, you've got it. We look at the equity markets to sense the sentiment. Okay, because the rationale behind this is when equities are seen as like kind of more risky investments than say like bonds. Okay, so that's why we're looking at the equity market, because when equity investors get worried about the future of the global economy or the economy of a country, they take their money out of the equities of that country. So when we see equities falling, it's a good indication that the market is risk averse. It's in a risk off environment. So we're looking at equity markets to show us what risk appetite is like. And every day on the squawk, you're always getting news. Oh, okay, we're seeing a drop in S&P 500, or we're seeing a fall in S&P 500 futures, or we're seeing European bourses are all in the red. So it's just a quick, easy guide. Okay, so that's what we're looking at. Is we're looking at the equity market to try to understand how risk adverse the market is. Right now, if the market is in a risk off mode, then we have certain characteristics. Okay, so when it's a risk off mode, what we see is in risk off markets, we see the yen and the Swiss franc appreciate. Okay, so say you suddenly came to your desk and you saw the Nikkei down plus 1.2%, the Hang Seng down plus 1.4%, the Shanghai down plus 2%, you would know that the Japanese yen has been appreciating and the Swiss franc would have been appreciating. They would find bids. So straight away you can know, I would know for the coming session, as long as that risk sentiment remains the same, I would know the Japanese yen and the Swiss franc would remain strong. Okay. Conversely, you find these high beta currencies like the Australian dollar, New Zealand dollar will lose value. Okay, because money gets removed from these riskier, yielding currencies. So it's moved out of the Australian dollar, moved out of the New Zealand dollar. And you would see the Canadian dollar depreciate. These are known as the commodity currencies as a 3, and these are known as the high beta currencies, the Australian dollar and New Zealand dollar. Okay, and of course you will get the Nikkei falling as well. There's a very strong correlation between a falling Nikkei and a risk off tone. So I just put that there because it's just a helpful rule of thumb. Come to your desk, first thing, look what the Nikkei's done. Okay, use that as a starter for 10. Now, if it's a different scenario, if it's risk on, so in a risk on environment, say you came to your desk and the equity markets were, the Nikkei's up plus 2% and the Hang Seng's up plus 2%, then that the higher yielding currencies like Australian dollar, New Zealand dollar, and Canadian dollar tend to appreciate, okay, and the yen and the Swiss franc sold off. So that's the relationship. The thing to look at it is use this intermarket correlation table. This is just a good rule of thumb. And if you've been looking at the market and you think to yourself, look, I don't understand, how stocks, commodities, bonds, impact the FX sphere. Well, then take a screenshot of this and begin to understand, because the basic relationship is as follows. When you get a lower volatility index, so it's called the VIX, when the VIX is lower, okay, when you've got stocks rallying, so you've got commodities rising, got oil rising, say you've got bond yields rising, then that's risk on in FX trades, okay? You're risk on. Conversely, when you get a higher volatility index, when you get stocks falling, when you get commodities falling, when you get bond yields falling, then that's risk off in FX trades. So these two kind of major sentiment themes are just really key, and they just constantly, almost every week for weeks and weeks, we've been flipping on between risk on, risk off, and it's a really good go-to trade. Like a trade that I've been going to a bit is the Australian dollar, Japanese yen. Because the Australian economy is so tightly connected with the Chinese market, when you get something that's bad for China, that's going to be bad for the Australian dollar. So when we've been getting some of these really bad, headlines for the Australian dollar, for the US-China trade war, rather, I've known that's going to weigh heavily on the Australian dollar. So that's going to be an Australian dollar sell. But then you also know, well, hang on, but the Japanese yen is going to be bought. So, that's a really strong Australian dollar, Japanese yen sell. Okay, and you can get some really good moves. So the Australian dollar, Japanese yen currency pair is basically seen as the currency pair, which is a proxy for risk. Okay, So, you know, if it's risk on, then you expect the Australian dollar Japanese yen to rise. If it's risk off, you expect the Australian dollar Japanese yen pair to fall. So just to be aware of that kind of relationship. Yeah, okay. Amelia, I'll look at that question on the CAD Swiss franc towards the end of the webinar. Thank you very much for your question. We will cover that. So just marking that in, and we'll do it at the end of the session. So now a little snapshot test. I thought I'd test you guys. We're going to do a quick snapshot now, and we're going to look at the equity markets now. I'm just going to take a quick screenshot for you. And what I'd like you to do, we'll look at the commodities as well. What I'd like you to do is I'd like you to have a look at this snapshot here and just write down, just write down as you look at these, this snapshot of the equities markets. So these are the bonds prices. This is the yield of bonds. This is the major indices, and this is the commodities. Okay, so that's the three major, divisions. Now, having a look at these, as you look at this chart, what would you make of it? So let's look at the equities. We've got the S&P 500 is flat. S&P 500 futures is down 0.51%. The VIX is up marginally, plus 5.9%. The NASDAQ is just low. The Dow is just around flat. And then we've got a whole series of the European equity markets are all mildly down, okay? And then we obviously covered the Asian markets earlier. And then bond yields, we've got a mix in bond yields, and we've got like the US 10-year just around flat. So what would you say? Looking at that, what kind of risk market would you say we're in? Yeah, Sammy, Aaron, I'll give you that. Yeah, it's mixed. It's a mixed bag. But as Aaron, you said, it's tending towards a risk off. Okay, so you can see we had the US market was closed yesterday. Then we had the Asian market, which has been mildly down. Okay, then we've had more mildly risk off sentiment, a little bit, maybe marginally stronger in the European session. We've got the S&P 500 futures down as well. So at the moment, you're saying, okay, if you just came to your desk, you'd start reading here, because you'd be like, okay, there is some risk-off sentiment in the market, and then you would read up to find out what is that risk-off sentiment. Okay, what is going on? And obviously this risk sentiment can change all the time. So here is a quick tweet that's just come out from Donald Trump, and he's just sort of said, that US is doing very well with China negotiations. China will get a tougher deal if Trump wins 2020 elections. So, deal will get much tougher. In the meantime, China's supply chain will crumble and businesses, jobs and money will be gone. Okay, so that's quite fighting talk, isn't it, from President Trump? And so you'd be, be looking at the equity markets. How's the equity markets reacting to that? And what's the response? So you've basically got the right idea. So Sammy, Aaron, Ifam, yeah, I'd agree with that. I think it's a mix with a tendency to risk off. That's exactly where I say we are. So we know, okay, we're expecting some yen and some Swiss franc bids to be in the market. We're expecting some buyers out there. As long as the environment that's caused this risk off sentiment to remain, we're expecting that that risk-off sentiment to stay, okay? So we need something fresh or new to change it, okay? So again, okay, in the Asian session, looking back, the main event last night was the RBA rate meeting, and I got up very early here in the UK to cover that rate meeting. I thought there was a chance that the Reserve Bank of Australia would cut interest rates, and I was looking to potentially short an Australian dollar trade out of that. Now, they haven't shorted, they've kept rates unchanged. They have added that rates are expected to remain low, for an extended period of time, and they have said they think the global economy is reasonable and will ease rates if necessary. They once again focus the labour market. As I've spoken to you, a number of you guys before, okay, yeah, EFAM, you need to find EFAM's just asked a question, where do we get that summary panel of bonds, indices and commodities you showed us? Now, that is a paid subscription access that I have, but you can get, if you go to TradingView, you can get, I've sent it to you, or you can get details on the commodities and the indices there. Okay, so TradingView is not bad when you have a fiddle around. Returning to this, what I've said is keep your focus on the labour market. So the RBA is focusing on the labour market. Remember, it's when a central bank tells you what they're focusing on, it's very, very helpful. Okay, that's what the Reserve Bank of Australia have done. They've said that they're focusing on the labour market, which means that future labour releases for the Reserve Bank of Australia will be very important. Okay, they're likely to move the market. Okay, because we know the central bank is focusing on them, so that's a clue. So mark that, acknowledge it. We had UK PM Johnson warning that if lawmakers vote for another Brexit, I mean, today it's just Brexit mania today. You know, we knew this was coming because the Houses of Parliament have the House of Commons have met again for the first day after a big summer break, and this was kind of expected. And so there's this bill that's being voted on today in the House of Commons that would force PM Johnson to seek a Brexit extension until 31st of January 2020, you know, if the PM has not passed a Brexit agreement by 19th of October. Let me just show you what's going on with Brexit. Okay, so here we are on the 3rd of September, okay? Now, there's a parliamentary suspension that's going to begin, this is called the prorogation of Parliament, that's going to begin around the 10th to the 12th of September, okay? Somewhere in there, Parliament is going to be suspended, which means there's going to be 1, 2, 3, 4, there's going to be a month, more than a month, where the House of Commons is suspended, can't sit, okay? Now, that means that the time, look, here's the red box is the current Brexit deadline, the 31st of October. So it means there's this mad scramble that's going on now because some MPs want to try to stop Britain leaving the European Union without a Brexit deal. Boris Johnson has said to the British people that we're going to leave the EU on 31st of October, do or die. In other words, he's saying we're absolutely going to leave. It doesn't matter if we've got a deal or not, we're leaving. And Boris Johnson is saying that's how we're going to negotiate with the European Union, because it's only when the European Union believe we're actually serious about leaving and leaving without a deal that they'll be prepared to offer us any kind of alternative. So that's the perspective that Boris Johnson is taking, whereas other MPs are saying, well, we think that's an irresponsible position and we should no way leave the European Union without a deal. So we're going to try and stop Boris Johnson. So there's this big fight that's going on in the UK Parliament. And, you know, that this is due to be going on for the next, you know, you can see here, next 6-7 weeks in the run up to the 31st of October. So there could be potential, you know, plenty of potential opportunities for moving in the right direction with current sentiment. I would say is because there's so many headlines and there's so many different different combinations of what can happen. You know, if you're, you know, it's very important in this kind of market environment to take profit when you have it. Okay, so you know, don't be holding out for that, you know, 1,000 point trade, because take the profits as they're presented in this kind of environment, because price will whipsaw, it'll be down, it'll be up, it'll down, it'll be up, and you know, today's been, you know, a good example of that. Okay, so this is a little simplified version of the events that could happen before the suspension. So before the suspension here, this is basically the options. So if you start here, so the legislation is put forward to delay Brexit. That is happening and that is being spoken about tonight. Okay, so we see here's the sorry, here's the order of business for the House of Commons. I'll just take a screenshot of that on Twitter. That is the order, okay? So basically the application on European Union withdrawal, the SO24 application on the EU withdrawal will take place at 6:30 British summer time. Yeah, that's 1:30 EDT time. But just to be aware of that, okay? 6:30 to 9. So that's going to be risk for the pound. So we're starting here. That bill's being put forward. If that bill passes, so say it's voted on and it's passed through the House, it has a majority, then there's two things that can happen. The Prime Minister could delay it from becoming law. But what Boris Johnson has said, he said this, he says, if the bill passes today and, MPs try to stop a no-deal Brexit, Prime Minister said, we're going to vote on a general election tomorrow. And that could lead to an election. Now, if there is an election, at the moment, Boris Johnson has the majority. So as it stands, if there is a general election, it looks like a greater victory for the Conservatives. And a greater victory for Conservatives with Boris Johnson as the Prime Minister means that a no-deal Brexit is more likely because we know his position. So that's that outlook there. So at the moment, that's seen as a pound negative. If it fails, so if the legislation fails, then there could be, the next move could be a no confidence vote in the government. There could be an attempt to just say we don't have confidence in the government, and if the government wins, then we get the prorogation, and then MPs have another shot at 14th of October, but the chance of a nil goes up. Okay, so if the government loses that no confidence vote, then we either have no government formed and an election, or we have a caretaker in the government formed, a Brexit late, an election. So take a screenshot of this. We don't have time to go through all of this, but here's the material for you, okay? So you can have a look at that and so you can follow it as we're going along. Now, you can see coming to your desks, the whole, the feed was awash with negative Brexit news, this concern, the sentiment. So coming to the desk this morning, what currency pair do you think you might have chosen to think, okay, this is the strong currency pair and this is the weak currency pair? Which ones might you have had a look at? Go and see if you can tell me. And maybe you chose this morning. Have a look. See if you got it there. Yeah, EFAM, exactly. EFAM is a pound yen short. So that was it. Coming to the desk this morning, the sentiment that identified was a weak pound and a strong yen. We saw, equity markets were just slightly pressured, weren't they? Okay, we know there's risk sentiment in the market. We know that if there is a hard Brexit or a no-deal Brexit, then we know that's going to result in more strength for the Japanese yen. We know the pound is weak on Brexit sentiment. So this was a trade that I took this morning. I took this around 8 a.m. I can see price was just kind of, falling around these lows. Price was just looking to break out, make new lows, and I was looking at it, and it was making sense from a technical perspective for me. And so it was just like a straightforward sell. So I just sold the pound, and as the price started moving down, just reduced my risk, and I took 50 points of profit down here at like 127, like 29 or something like that. So I took from about 127.85 up here, 127.29, just to, you can see that's like 1-2 hours. Okay, a very quick trade. It was just based on this this sentiment shift, pound yen. If you've missed that, this is what I put on our Telegram feed, which was the place where I'd expect sellers to return to. and you can see price has moved since then back up to the 128 level. Now, Mike, the difficulty with trading the pound at the moment is these headlines, okay? So headlines can move at 50, 60, 80, 100 points at a time. So what, my outlook is I want to take moves when they're there, and when the profit's there, I want to take the profit and leave it. I just want to take the chunk, because or else the danger of being whipped out by, a different headline is quite high. So that's the thing to be aware of when you're trading the pound. It's going to be very volatile. Going into this evening as well, 6:30, we're going to see way more volatility for the pound. So be ready and prepared for that later. Yeah, so that was the Brexit focus. This is the issue for pound traders at the moment. That's really what I was. That's really what I was saying here. Okay, the issue for pound traders at the moment. Saw the European mid-morning session. This was just looking what we saw. So this is quite helpful to see. So come mid-morning, we saw a lot of yields were down. Bond yields were falling further. S&P 500 futures were down 0.96%. We saw all the European equities in the red. The VIX was higher. Okay, so you put that all together, and you can see that's it was a slightly more risk-off tone. Okay, in the mid-morning, and that you can see that corresponds to the way that the yen and the pound pair fell heavily. Brexit concerns, the yen being bid on risk-off sentiment. So it's just a perfect pair to trade, because you can see, look, there's virtually no drawdown in that trade, and that's really what you want. You don't want to be sitting in 40, 50, 60 points, 70 points of drawdown. Ideally, you just want trades that go in one direction. And when the fundamentals are really lining up, then that's when you get these trades in one direction. That's 1, 2, especially 3 hours of selling. Okay, that sentiment was there, took it at the right time, and took profit. And that's it, walked away from the market and left it at that. Okay, so the sentiment for the US session. Okay, so what I'm doing now is I'm waiting for a fresh driver for the pound yen. Okay, we've had the same kind, it's been the same kind of sentiment from overnight Asian session in the European session. So waiting for a fresh driver. So let's just show you how that works, all right? So prices we traced up here. So if you get some fresh news that's new, that means a no deal Brexit becomes more likely, then we're going to see further pound yen downside. So you'd expect sellers to enter the market. So if there is any fresh news, the other way of looking at this is, oh, it's the wrong one. Let's have a look at the other way of looking at this is you can draw a trend line, 15-minute chart, and you might, some people think, well, if I think there's more downside, I might wait for the break of that trend line. Okay, and a break of that trend line is an indication there's a S1 pivot point there. You've got the 100 moving, the next moving average, but that's like a one little trick. I don't know where to enter. You can wait for a break, for instance. That's one thing that people might do. Another pair that's quite interesting at the moment is the euro yen. Okay, now the euro yen, let's look at this on the 1 hour chart. Euro is being pressured ahead of the ECB rate meeting in September the 12th, and the expectations are that there'll be a 20 basis point rate cut, about 83% probability that the market's expecting. And that is very, very bearish for the euro. We're seeing the yen bid on risk-off tones. So you can see, potentially, if a retracement comes up here to the 117 level, looks quite interesting. It's just underneath that pivot point, just above, in between the 100 and 200 exponential moving average. And you can expect traders to be putting their stops here, just above 118 level. Okay, remember, big round numbers in the market tend to have added significance. So they work as magnets. You know, traders take profit at the big round numbers. They move around them just because they're psychological numbers, really. So that's another potential trade. Now we'll look at your suggestion, Emil, as well. Okay, so Emil in the question panel has suggested Canadian dollar, Swiss franc. Okay, so let's look at this. So first of all, let's get a handle. It's not a pair I'm massively familiar with, so let's just get a handle on this from a technical perspective. So from a technical perspective, I think it's a good shorting opportunity. Okay, so let's have a look. Let's draw some support and resistance lines in here. So we've got some key support. Let's get a horizontal line. Let's hope this comes in. Okay, hang on. Okay, so we've got some good support here, here, and here. And we see the price is testing that support at the moment. We also have some overhead resistance. Here, 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 and here, which is interesting with the 100, 200 exponential moving average. We have price having rejected the 100 exponential moving average once, twice, 3 rejections from that level, moving away. So price, from a technical perspective, is stuck in this little mini range between kind of 0.7450 and 0.7400. So we're in this kind of, this 50-point range at the moment. Now let's see if there's any pivot points that are around. Yeah, okay, so we're just breaking through a pivot point here. We're just breaking through a pivot point here, 0.7413. So technically, from a technical short perspective, a stop above 0.7500 makes sense. Okay, so from a shorting technical perspective, a stop above 0.7500. That makes sense. You've got the 100, 200 exponential moving average on the daily chart. You're above the significant number, 0.7500, and you're above that overhead, resistance level. Okay, that all makes sense. Now let's think about it from a fundamental perspective. What are we expecting from the Swiss franc? We're expecting the Swiss franc to be bid. Okay. Now the reason we're expecting the Swiss franc to be bid is because of general risk-off tone in the market. So we're expecting Swiss franc strength. So far, Emilia, so good, okay? That's it, because we've got one half of it right. Now, what about the Canadian dollar? Now, the Canadian dollar is in an interesting perspective at the moment, because the Bank of Canada is the only major central bank that hasn't become obviously dovish, okay? Now, the market has been waiting for the Bank of Canada to turn dovish for quite some time, okay? And last Friday, we had a really good GDP beat out for the Canadian economy, plus 3.7% versus plus 3% expected release. So that should have been really supportive for the Canadian dollar, but the Canadian dollar sold off. And the US dollar Canadian dollar currency pair at the moment is currently breaking out of the 1.3350 overhead resistance level. We'll look at that in a minute. So who meets tomorrow? The Bank of Canada. And what are the Bank of Canada going to do, Amelia? Okay, that's the big question. So all eyes are focused now on the Bank of Canada rate meeting tomorrow, 3 p.m. British summer time. Now, if the Bank of Canada cut interest rates, then this trade becomes great, okay? So if they cut interest rates, that's the sort of trade you would be, it would be a very straightforward trade, stop above 0.7500, you could play down to these lows here, 0.7321 as a first target, with a potential target of 0.7300-ish. That would be sensible, okay? Now, if the Bank of Canada say, okay, we're looking at turning dovish, okay? The market is pricing them into cut rates once this year. So they might say, well, yeah, we're looking at cutting rates at our October meeting. So that could still be potentially dovish. Just need to see the rest of the rate statements, okay? So would I enter this trade now? Okay, no, I wouldn't, because I'm waiting for the Bank of Canada. You know, had price been rising up here, and you're looking here and you think, oh, okay, I think I know what I think the Bank of Canada are expected to be dovish. I might sell from there. That's a kind of, a situation you might have sold from that level, okay? Going into the rate meeting. I'll show you what I was trying to do in this kind of, with using a very similar logic, Amelia, okay? So from the fundamental perspective, I hope that answers it. Basically, it's the right kind of trade to be looking for because you're pairing up the right kind of currencies. The only problem is the timing. Is you've got the Bank of Canada meeting tomorrow, so you just got to factor all that in. Okay, so if they cut rates unexpectedly, that would be a great trade. That'd be a really good trade. And the next stop will be down here, 0.7300. That would be an obvious target, just above that. Just 0.73010 or something like that. So good. Now I'll show you this thing about getting into an event. Now, this kind of understanding comes as you begin to understand the fundamentals. So here's that level I was talking about. Let's just get rid of the pivot points, okay? Here's that level I was talking about here, this 1.3350 level that it's just broken out of. So the market's kind of, the US dollar has been doing well, okay? So the US dollar has been having a good run of data, despite all the pressure from Donald Trump. The data is just holding up for the US. They're expected to take a hawkish rate cut at their next rate meeting. So that there's general bids in for the US dollar, and looking at the dollar index today is up 0.34%, 99.25 on the dollar index. If you want to see what the dollar's doing, guys, just look at the DX. Okay, that's the dollar index, and that shows you. Look, the last 2 days, bang, bang, bang. That's telling you how good the dollar's doing. Okay. That's it, DXY and trade view, and you'll get the dollar index. I'll just go back to the US dollar, Canadian dollar chart. So, Amelia, what I was looking at doing is I was looking at trying to enter down here at this 1.3328060 level. So I had some buy limit orders down here to buy if price moved down in anticipation of the Bank of Canada rate meeting. So I was trying to buy from down here. I was just reluctant to buy up into these highs. Generally you don't want to buy from the highs if you can help it. So I was just looking for a little bit of a retracement coming down. Didn't get it, but it was based on that similar logic to what I just spoke about with the CAD Swiss franc trade, the potential short that you're looking for. So that's like, when you're going into an event, it's obviously more speculative. Okay, so it's more speculative than the pound yen trade I took today. Okay, because that was just, the pound yen trade that I took today was just, I just suddenly realized that no matter what happened, the pound was going to be pressured, because if the bill passed, then there's going to be a general election tomorrow, so the pound's going to be sold. If the bill fails, then a no-deal Brexit is more likely, so the pound's going to fall. So there was just a window of time when it was dawning on people, oh, hang on, no matter what happens, the pound's going to be sold from this point. So I hope that helps. Looking forward, obviously you got the ISM manufacturing PMI data coming up. This is feeding into the US dollar, so that will have some impact on the US dollar. We've gone through the picture for the US at the moment. Hang on. Oh, I've taken the wrong picture. Let me get tomorrow's data up as well. I'll just take a picture of tomorrow's data. This is tomorrow's data for the Canadian dollar. Okay, the Bank of Canada rate statement. I'll put a little synopsis up on HYCM's Telegram channel, just outlining the major different options. So if you're not on that Telegram channel, speak to your account managers, get on that Telegram channel. I do try to post useful stuff up there. So be onto that. 3 p.m. That's a gigabit. There's a chance that they cut interest rates, and when you get a surprise interest rates, that's when you get currencies moving in a very predictable way. Okay, so a surprise interest rate cut, 1.50%, or 1.25%, then we'll see the Canadian dollar fall instantly, and you'll see those CAD Swiss franc trade just plummet 80 to 100 points straight off the bat. So just to be aware of that, and that's the kind of trade that I look to enter in a market. Okay, and I think I shared with you guys when I took the surprise Reserve Bank of New Zealand interest rate cut of 0.50 basis points. I traded with leverage. As many of you guys know, I don't advocate trading with leverage, but I did trade with leverage on that surprise announcement. Okay, here's New Zealand dollar Japanese yen example that I've given you for the trading out of how to trade surprise news events. Now, the key to trading surprise news events is all about the context. The context is absolutely critical here. Okay. On August the 29th, we had the ANZ business confidence data came out. It came out minus 52.3, and the private capital expenditure minus 0.5%. Now, the end result of this business confidence data, if you clicked on that tab and you read up about it, you'll see that it was like some of the lowest results in 11 years. It was a very, very poor reading, and it was just really gloom and doom. Now, one of the factors that the RBNZ use is they use this business confidence survey to kind of give them a handle on whether they're going to be cutting or raising interest rates, how well the economy is doing. This is an important indicator, in other words, for the RBNZ. So the RBNZ, we knew at the time they've cut interest rates by 50 basis points. The sentiment for the New Zealand dollar is really bearish. So all the expectations were negative. Okay, so when you get a surprise negative data point, and in this context that it was all negative for the New Zealand dollar, will they be cutting interest rates even further? This kind of release would indicate, well, yes, they will. Okay, so this was Thursday, August the 29th. Now, I didn't get up for this. It's right bang in the middle of my sleep, so it's a bad time for me. Okay, this. And I was umming and ahhing about should I set my alarm and go for it. In the end, I didn't. But it would have been a good trade. And if I'd been at the desk, this would have been the ideal way to handle it. Okay. Again, at the time there was risk-off sentiment in the market, so you look at pairing it with the Japanese yen because that's that's being strong and bid. And on the 1 minute chart, if you had just waited for the release, if you got in at some point during the first couple of minutes. Usually you want to be, these kind of trades, you want to be in, first few minutes that you can, okay? And I would have entered in around there, and we would have traded that first move down, and I would have hit like, my target would have been like a pivot point or some obvious support resistance level. Obviously just being aware of that 67 level that's here. It's obviously a key level, and would have gone for maybe 20-30 points. It's not like a massive market mover, okay, business confidence, but it's the sort of thing you might get 20-30 pips from, okay, a very short quick trade. But that's what I would have done. But you can't just go to the calendar and say, oh, okay, pending home sales, it was 0.1%, but minus 2.5%. Ah, that's worse than expected, I'll sell. It's all to do with the context. You've got to get the context of what the market's expecting, okay? Because when you get the context correct, you can understand why the market will move. It doesn't just move. Everything positive results in the currency being bid. Everything negative results in the currency being sold. It's not as simple as that. You've got to understand why the market is thinking about the certain currencies. And you get that by following the news feeds. Here's a list of resources you can read. And as you read up on these news feeds and understand what's going on, then that will really help you, okay? Don't forget the intermarket correlation. Here's a quick picture to take again. Okay, another little potential trade that's worth looking at is this Australian dollar, New Zealand dollar trade. So let's just look at this pair. It's not a trade that I'm going for because it just doesn't particularly interest me, but it's one that could be valid after the meeting from last night. So we had the RBA rate meeting. Okay, so it came out about 5. This here it's about 5 a.m. And the rate statement, it was all kind of, reasonably positive. We know that the New Zealand dollar is very bearish. The question is, was the Australian dollar going to turn bearish as well? No, they haven't. And as a result of not turning bearish, there's been some relief in the Australian New Zealand dollar currency pair. Now, the outlook for the Australian dollar is bearish, but compared to the New Zealand dollar, it's less bearish. Okay, and we can see prices just moving up into that significant 1.0700 level. And that also happens to be the overhead highs are up here, 1.0730. So we're approaching its key 1.0750 level. So you can see, look, since there's been this dovish shift in the New Zealand economy, okay, you see, look, the Australian New Zealand dollar has just been bid. Now I traded some of this up to around here. Yeah, I traded up to from here-ish up to around there. And I got up too early as it happens. I took my profit somewhere around there, 1.0583. But you can see now, look, okay, the key thing, there's some Australian data coming out. So if the Australian GDP data comes out tonight, you can see it's coming out at 2:30 a.m. British summer time. That could be another catalyst. So I'm going to push it forward or bring it back. So it's just to be aware of, and if you just looked at that from a technical perspective, you could look at simple way to trade is just to put a Fibonacci retracement on the whole move up, and then trade the 50% retracement down, 1.0675, and then move back up to 1.0700, move back up just below that key level up there. The only downside with that is, it's just about 20-25 points. So it's not a very, massive move, but it would be a valid way of looking at it. Okay, guys, that is all we've got time to look for today. If you've got any other questions, please do let me know. I'm happy to look at them. Don't forget that HYCM do this service where if you deposit $1,500 into your own account, you get a 1-hour coaching session with me. If you deposit $3,000 into your own account, you get 1-hour session and 1-hour follow-up review with me. $10,000, you get a 2-hour coaching session, 1-hour follow-up, and 1 week's VIP support from me. So just to be aware of that offer that HYCM do. And I hope that that is helpful for you. Yeah, you're welcome, Aaron. That's good. I'm glad it's helpful. And don't forget, if you can, sign up to the Telegram channel. And before I forget, with all the Brexit headlines, there is a service called RandSquawk, which is very helpful. I'm just sending it to you all, the name of the service. And they offer a 2-week free trial. So if you want to see what it's like trading with a Squawk service, sign up for the RandSquawk service for free. Even if you're not going to use it, use the free service. I know you can get like a 2-week free service, and if you do sign up for a demo, go for the full service. So you begin to taste and see, what kind of resources are available, and you'll find it complements these kinds of sessions very well. Okay, and it'll help you just to, get thinking in a different, more market focused way. Okay, guys. Well, thank you very much for your time. Thanks, Toby, Sam, Rosemary, Mike, Isaac, Ashik, Harindra, Emil. Good to have you, Aaron, Aljim, Diep. Take care now, guys, and don't forget, next Monday at 12:30 GMT time, we'll have our FX week ahead. Have a great week, guys, and thank you for your time. Goodbye.